CrowdStrike just reported their earnings and the stock is down by about 3%. It's currently trading at about $352. So I'm going to talk about whether this is a buying opportunity or not. In doing so, I'll cover some financials and I'll do a valuation. In full disclosure, I used to own CrowdStrike at $140 cost basis, but I sold out of it when it reached $290. It had a price to sales of 20, which I thought was ridiculous, and therefore I sold it. But I still own other players like Sentinel-1 and Fortinet, which are up significantly this year. Let's move on to CrowdStrike's financials. As you can see on the screen, in the most recent quarter, they grew their annual recurrent revenue by 32% to $3.865 billion. With respect to total revenue, they made about $964 million in the most recent quarter, and that represents 32% year-over-year growth, which is very impressive. For the financial year of 2025, they are providing guidance. They are saying they can make about $3.9 billion of revenue. That represents close to 30% year-over-year growth, which is very impressive again. Let's look at their income statement to look at their margin profile. The revenue for this quarter is about $963 million, and the gross margin is about 75%, which is great for a SaaS company. And the operating margin is only 1.4%. Currently, they're still in growth mode, so the operating expenses are quite high. Therefore, the operating margin is quite low. But note at the bottom of the screen, dilution is still significant. 3.7% dilution in a year is very significant. They used to have 242 million outstanding shares last time, and now they have 252 million. So that's significant dilution, which we need to pay attention. And since this company is not profitable on a GAAP basis yet, we can look at the free cash flow margin. It's about 28%, which is very healthy, but in my opinion, it's not a true depiction of the profitability because this includes a lot of non-cash expenses like stock-based compensation. So I would not take this seriously at this point of time, but I will consider net income margin in the valuation. Now let's move on to the valuation to see how much is the upside in the coming 5 years. Before I go any further, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about CrowdStrike. I'm going to show two cases, one with reasonable assumptions and the other one with great execution. In the reasonable assumptions case, in 2024, they made about $3 billion of revenue. I'm estimating a growth rate of 27.5%. This company is saying that they can grow about 30% this year, but as the company gets bigger and bigger, it's hard for them to grow. Even though the total addressable market is growing in the cybersecurity sector, there are a lot of players like Palo Alto Networks, Fortinet, Sentinel-1, Zscaler. So there's a number of companies competing for the same pie, and therefore I think 27.5% is reasonable. With that, they can make close to $10 billion of revenue in 2029. Since this company has close to 75% gross margin and they're aiming for close to 30% operating margin, I think 27.5% or 28% net profit margin is apt, and therefore they can make about $2.8 billion of net income in 2029. In my opinion, by 2029, CrowdStrike will achieve some maturity and will come in close to 35 price to earnings multiple. That's why I'm considering 35. But if you think they deserve more, you can put your own number. This is reasonable assumptions case, so I put 35. With that, this company would be worth about $99 billion in 2029. Currently, they have close to 252 million outstanding shares, and they diluted the shareholders by 3.7% in the most recent quarter, right? But the stock-based compensation is going down as a percentage of the revenue, and therefore I'm only considering 3% dilution from now on an average. So that gives us about 279 million outstanding shares, from 252 million now to 279 million in 2029. At that time, when I divide the $99 billion of market cap with 279 million outstanding shares, I get a stock price of $355. Currently they are at $352. That's 0% gain in 5 years, which is not an attractive return at all. So this is a big sell if we look into the reasonable assumptions case. Like I mentioned before, I bought at 140, I sold at 290 because I thought it's very, very expensive. Now let's move on to the great execution case. I'm estimating 30% growth, and I have the same net profit margin, but I'm giving it a 45 multiple, when it matures, right? So that's an expensive multiple. If you think people are willing to pay 45 multiple even in 2029, then this is your valuation. So with that, the stock price in 2029 would be $502. Currently they're at 353, so that's about 42% gain in 5 years, and that's not going to beat the index. So in my opinion, at $353, CrowdStrike is not a buy, it's actually a sell. I would not even consider it as a hold unless you think they will still command a price to sales of 20 even in 2029. Even if you put that price to sales of 20 in 2029, which is actually ridiculous in my opinion, the stock price would be about $700. That's still a 2x in 5 years. So overall, these are my thoughts. Let me know your thoughts in the comments. Thank you so much for watching.